What do pancakes and crypto have in common? Well, not a lot, to be honest. Other than the fact that one of the most popular cryptocurrency exchanges is called PancakeSwap. But what do I actually mean by a cryptocurrency exchange? And what's the difference between a decentralized and a centralized crypto exchange? Well, that's what we're going to look at today. In short, a cryptocurrency exchange allows us to trade, buy, or sell cryptocurrencies. So if we want to buy Bitcoin or Dogecoin or whatever coin is taking our fancy at the moment, we're going to need a crypto exchange to help us out. And these crypto exchanges are mainly of two kinds. We've got the decentralized and we've got the centralized cryptocurrency exchanges. A centralized cryptocurrency exchange is basically one where there's a third party or a middleman helping those transactions taking place. So if I were to exchange one coin for another coin on the platform, then that trade or that transaction is managed by the exchange itself, and it's not directly between the two users. So once we've signed up to the centralized exchange, whether it's Binance, Coinbase, Kraken, or whatever, and we then deposit funds into our account, whether that's our local currency or some crypto if we have any, the exchange essentially gets custody over our assets. So whenever we decide to transfer any of these funds to someone else, what the exchange will do will just alter the balance on the respective accounts to show that that transaction has taken place. This is similar to the process that banks follow. So whenever we send money to a customer in the same bank, the bank doesn't actually physically move our money from one account to the other. Instead, it just adjusts the balances of the accounts in its own database. The beauty of having a middleman handling transactions in this way, whether that's for the banks or the crypto exchanges, is that it should make it easier and safer to move funds around because of the higher level of security and monitoring that these middlemen can offer. So this just begs the question then, why should we use a decentralized exchange? Well, this largely comes down to the fact that having our money in a decentralized exchange gives us far more control over our assets. With a decentralized exchange, there's no middleman or third party handling our assets. Instead, whenever we send our money or our crypto from one person to another, it doesn't go through any bank or intermediary first. Instead, all of our assets are held on the blockchain and not by some escrow or third-party service. And if you're not too sure about the blockchain, I do have a video up here somewhere which you can check out whenever you want. So whenever transactions happen on a decentralized exchange, they only need a smart contract to make that happen. And smart contracts are basically these algorithms which self-execute when preset conditions are met. And without going into the weeds here, all this really means is that we can transact on decentralized exchanges without having these middlemen or third parties present. Now, this is all very good, but it doesn't really help us answer the question of whether a centralized or a decentralized exchange is better. So this is what we're going to look at now. So we now know that the crucial difference between a centralized and decentralized exchange is whether or not there is some third party or middleman present handling the transactions. But in all truth, the differences between these two different types of exchanges go far deeper than this. So what we're going to do now is compare and contrast these two different exchanges by looking at 6 different things: diversity, security, popularity, transactions, features, and liquidity. And so by looking at these different things and comparing how the different exchanges match up with one another, you can get a better idea of which exchange is best for you. First, crypto asset diversity. Now, there are over 10,000 different cryptocurrencies as of February 2022, but not every single crypto exchange allows us to trade, sell, and buy all of these different cryptocurrencies. With a centralized exchange, a cryptocurrency needs to satisfy security protocols, have trading activity, and also comply with certain legal standards. So when you're trying to trade cryptocurrencies on these types of exchanges, you're probably going to only find the most popular cryptocurrencies out there, like Bitcoin and Ethereum and others like that. On the other hand, a decentralized exchange has some access to some pretty rare tokens, as they can exchange pretty much anything they want. For example, if you wanted to buy or trade the cryptocurrency Floki Inu, you can't do that on a centralized exchange. Instead, you'd have to go to a decentralized exchange like PancakeSwap or Uniswap to trade that particular token. Overall, neither exchange wins here. It kind of depends what we want. If we're happy just trading the mainstream cryptocurrencies, then just stick with the centralized exchanges. But if you want access to some rarer or more niche tokens, then go with the decentralized exchanges. Second, security and privacy. Now, while centralized exchanges are going to put us in a position where we're less likely to be scammed, there is a risk that hackers could essentially hack the entire exchange, getting access to all of our funds. And so we would basically lose all of the money that we were holding in that centralized exchange. And this has actually happened before, such as in August 2021, where about $97 million of money held in the Japanese exchange Liquid was stolen by cyber attackers. So broadly, decentralized exchanges are more safe and secure because there's no risk that a hacker could essentially hack the exchange and get access to multiple users' money. And the reason for this is that decentralized exchanges are non-custodial, which basically means that we, as a user of these decentralized exchanges, are always in complete control of our own assets. So whenever we're sending money from one person to another, it's just sent from one wallet to another and doesn't actually go through the exchange itself. The other great thing about a decentralized exchange is that they don't require us to submit any personal information whatsoever when signing up to their exchanges. In other words, it's completely permissionless. Whereas if you sign up to a centralized exchange, they have to comply with Know Your Customer and anti-laundering laws, which means that you have to submit these personal identification documents to use their exchanges. So on that basis, I think that decentralized exchanges have the upper hand. Third, popularity. Now, currently, centralized cryptocurrency exchanges are more popular than decentralized cryptocurrency exchanges. And that's mainly because these centralized exchanges entered the market first, they have slightly better infrastructure, and they also have greater liquidity, as will come on very soon. At the moment, decentralized exchanges still feel very clunky and limited, and they also offer a far less forgiving user experience. So, for instance, if we were to forget our wallet seed phrase, which gives us access to all the money in our account, that money would become totally irretrievable. A centralized exchange would never let that happen. But having said that, as more decentralized exchanges enter the market, I can see them becoming increasingly popular, and it wouldn't surprise me if one day decentralized exchanges are the go-to way to trade cryptocurrencies. But for the minute, centralized exchanges win. Next, transactions. Now, while centralized exchanges do have some transaction fees to deal with, decentralized exchanges are potentially exposed to much higher transaction fees. And the reason for this is because decentralized exchanges are built upon blockchains that support smart contracts. So whenever the blockchain that supports that exchange becomes congested, then there's going to be much higher fees to ensure those transactions can take place. For example, when trading on a decentralized exchange that uses the Ethereum blockchain, fees frequently surpassed $100 per transaction due to congestion and scalability issues, so it's not particularly friendly for small-time investors. The other downside here is that decentralized platforms tend to be much slower than centralized ones. So whereas a centralized exchange tends to take about 15 or so milliseconds to execute an order, that same process will take about 15 seconds on a decentralized platform. So from a transaction perspective, centralized cryptocurrency exchanges are the place to go. In terms of features, centralized crypto exchanges have the edge over decentralized exchanges. And this is because a centralized exchange allows us to perform margin trading, allows us to use portfolio management tools, and we can also use multiple different order types to ensure that we can trade better. So in other words, we can do far more on a centralized exchange compared to a decentralized exchange. Decentralized crypto exchanges, on the other hand, offer very limited order types and don't offer margin trading and similar features to their customers. Now, in the long run, I can see this changing, but for the minute, the centralized exchanges are where all the features are at. Finally, we've got liquidity. Now, liquidity measures how easily assets can be bought or sold based on their availability in the market. Centralized exchanges generally provide markets with higher liquidity, which translates into quicker transaction times and also a lower difference between the buying and selling prices. As decentralized exchanges are still in their early days, trading volume and liquidity tends to be much lower. So in such markets, it tends to be harder to match with a trader who will buy or sell at a fair price. Again, like with all the other things we've already discussed, this situation is probably going to change in the future. The emergence of things like an automated market maker, which is basically a program that helps traders to buy and sell assets at a fair price, will hopefully address this issue. So we just got to wait and see, but for the minute, the centralized exchanges again win. At the moment, if we're an investor looking to enter the cryptocurrency space, a centralized exchange is still the most common means of doing so, and is probably the route I would recommend for now. But I really do think that decentralized exchanges will become the standard in the future, so they're definitely worth exploring. And although they are a slightly riskier place to trade, if we play the game right, we can potentially make a lot more money.